TCS announces its third quarter earnings, and with me is joining Rucha to take us through the numbers there. Rucha, over to you.
Yeah, hi. So as we can look at the third quarter numbers, well, versus estimates, revenue is slightly down actually, but there is a beat in terms of EBIT. Well, EBIT was expected at 15,900. It has actually come in at 16,900. So, but actually the reported numbers, we are waiting for the presentation to come out with the reported numbers. But as per our calculation and based on the financial statements, the audited financial statements which are out, EBIT has come in at about 16,900, which implies EBIT margin of about 26.4% versus estimate of 24.7%. So healthy beat on margin. Revenue, a slight bit off and disappointment on revenue, but PAT, that is profit, is something which is actually not well. Came in at about 12,380 versus estimate versus an estimate which was actually lower than that. But we are actually being joined by Mayuresh. Mayuresh, hi, thank you so much for joining. What's your first take on the numbers?
So I think revenue is more or less on expected line, which was expected to be flattish. But the margin outperformance is quite astonishing. And therefore, I think we look forward for the management commentary in terms of where the margin beat has come from. So I think on both these aspects, in terms of better than expected margin that the street was expecting, and if the management points out to a better looking second half and what they're probably looking into FY25 as well, in terms of the order book, as well as execution, along with pricing, I think the numbers are quite good, to be honest.
Okay, so revenue is largely in line, beat in terms of margin. So what do you think might, see, absence of wage hike and all I understand, but is this like actually attributed to the BSNL deal? Likely?
More probably. And therefore, I think if they are able to sustain this going forward, the expectations in terms of what TCS used to deliver in terms of consistent and elevated margins, and if they are able to hold on to this in terms of guidance, along with the other qualitative aspects like healthier order book coming through from different sectors and pricing related to that, I think the street will take that with both hands. If the commentary probably supports these numbers right now.
Okay, thank you so much for that. We have been joined by Rahul Jain as well. Well, Rahul, thank you for joining us. What is your first take on results? As we can see, based on Bloomberg estimates, revenue was largely in line or slightly, slightly lower than estimates, but a strong beat in terms of margin is what we could see over here. So what's your first take on the numbers?
So revenue, of course, is slightly lower to what we were also building in. And to the margin bit, if you could see, the meaningful reduction in the cost has come from the employee cost line item. So once we see more metrics around it, what has led to this saving, we could be able to understand whether this is temporary saving or this could be extended and continued. So one could be possibly led by some small shift in the offshoring leverage. If that is there, it's a good thing and it's more sustainable. But is it because of weaker hiring? Then probably it is non-sustainable, and we might see some reversal coming back. So nothing to be excited about from that point of view. As far as the BSNL thing is concerned, the revenue and cost from that element continues to be healthy in this quarter, so that is not supporting the margin kind of a thought process. It has supported both growth for sure in this quarter, but not margin tailwind is what I could gauge out with limited information that is out right now.
Okay, as I can see, the presentation is also out, and in terms of BFSI actually, apologies for that, the banking sector, the CCYOY growth has largely been flat at 0.9%. I think that was the case even last time where TCS reported, kind of flat. As I can see in second quarter also, it reported 0.1% constant currency YOY growth. So Mayuresh, don't you think BFSI is actually reviving for others and is not showing up in the numbers for TCS? Okay, Rahul, I think we lost line with Mayuresh. Rahul, can you please take that up for us?
Yeah, so as you might have noticed, this year the growth has been very largely led by the comms vertical, or rather regional, how it reports the BSNL deal, which has been the biggest single contributor to the growth in the current fiscal. BFSI has revived earlier in Q1 for them, but then ever since it didn't pick up the pace which one would have liked. And as a result, we see that the growth is not as rounded as it is seen in some of its other larger peers. So to that extent, yes, BFSI is not as good as one would have liked.
That lower than your expectations in the BFSI space?
Compared to the other 2-3 peers who have seen meaningful recovery on the BFSI side, it has definitely not picked up to that expectations.
Okay. Lastly, coming to the deal win side, deal win side has come out at $10.2 billion, a very strong movement, up about 18.5% quarter on quarter, 26% year on year increase. Good amount of deal wins, but not converting that to revenue. Do you think that is the case over here again?
That kind of a pain has not been the situation, at least across player in this fiscal. This fiscal is more about weaker signing itself and rather pick up of some volume from the past wins as well. So I think decent signing is a good point, and we don't see meaningful risk of deal TCV converting into revenue as a challenge on an incremental basis. Those uncertainties are behind us. So healthy order book is definitely positive.
The order book is definitely positive, but we'll definitely wait for management's commentary in the press conference today at 4:30 and the investor conference call at 7 o'clock. But thank you so much, Mayuresh and Rahul, for joining us and talking to us about the TCS numbers. It's always great to have you on the show. Well, with that, I'll toss it back to Himakshi, and thank you for having me as well over here.
Thanks, Richa, for taking us through those numbers.